So the stock market at certain times can be highly correlated to different assets. Now this is important to pay attention to because this correlation can tell us when certain assets might be topping out or bottoming and getting ready to change trend. Now there are three correlations that we need to pay attention to in this current market. The first one is oil, the second one is the 10-year bond, and the third one is the US dollar. Let's examine these one at a time. So the thesis with oil is pretty simple. The higher the price of oil, the more of a tax there is on the consumer and the less they spend. It's a wide-held belief that the consumer represents 70% of all economic output, so if the consumer is spending more on gas and less on stuff, the market is likely to suffer. Now couple this with the wealth effect the market provides, and when the market trades down, the consumer feels less rich, they don't remodel their kitchen, take that vacation, and so on. Now you can see here that as soon as crude started to aggressively break out of this range that it has been in, the market has sold off. Now that crude is trading down, the market is beginning to find its footing and possibly reversing trend. Now, as the yield of the 10-year bond increases, credit becomes more expensive, mortgages and auto loans go up, putting pressure on companies and consumers, and it gives a risk-free alternative to stocks. Now, if we just go to the beginning of 2022, you can see that as stocks trade down, yields traded up. Now, as soon as yields started to top out in late 2022, you can see that the market began to rebound. Now, fast forward to the present day, as soon as we got that breakout of yields, you can see the market aggressively sold off, but now that yields appear to be topping out in the short term, the market looks like it is set to rally. A strong dollar is great for the consumer, but bad for multinationals that have to repatriate their foreign sales back to dollars, which hurts their overall profits. Now, whenever we get persistent and strong moves up in the dollar, stocks generally sell off. Now, you can see here that as soon as the US dollar bottomed, stocks began to top out, and then that negative correlation kicked in where the stock market sold off as the dollar went up in value. But now, since the dollar appears to be topping out, again, it looks like the stock market is set to rebound. So there you have it, the three most important correlations that are driving most of the price action in the market environment right now. Now, as these assets have begun to come in, the market has started to find its footing. Now, it's important to remember that the market can appreciate with these assets just as long as the rise is slow and steady, not these huge volatile moves that we have been getting, which basically causes risk to get repriced throughout the market.